Today we're diving into an often overlooked tool for building wealth, which is life insurance. My name is Darius.
And I'm Carmen. Go figure. We're talking about life insurance on the Wealth Nation channel. For those of you who are new, welcome. And for those of you who continue to join and tune in, thank you so much for being here. So welcome to the Wealth Nation channel, where financial freedom isn't just a dream, it's a reality. And like Darius was talking about in today's video, we are going to be talking about how you can use life insurance as a wealth building asset, as opposed to just something you put on the shelf and you never use.
Mm-hmm. Now, life insurance comes in various forms, but the main two types are term life insurance and permanent life insurance. Term life insurance is straightforward. It provides coverage for a specific period of time, 10, 20, 30 years. The other one is permanent life insurance, which is more specifically whole life insurance, which has some unique benefits to it that we should definitely use for our wealth building tools.
Mm-hmm. Now, what I want to do is set the stage before we get into our 5 points that we're going to talk about today. And when we think about life insurance in general, there are other insurance products that we buy that we use to cover all of our assets. So let me explain. The very first one is car insurance. We typically buy car insurance to cover the entire value of our vehicles, so that if something were to happen, if we were in an accident, that insurance would cover the cost of our car. Right. So we're not just covering a piece of it, we're covering the entire car. And sometimes those who are in the accident as well. The next thing is homeowners insurance, right? If you buy a home, you usually buy insurance because you want to insure the entire home and the possessions inside of it. Do you ever buy home insurance and you just insure a piece of the house?
If we had that option, yeah.
Yeah, because you're thinking from a cost standpoint.
Right.
And then next would be health insurance. We typically buy health insurance because we want our health insurance to cover as much of our health expenses as possible, right? So you get where I'm going with. The theme is we buy insurance to cover our assets,
right?
Whether it be our car, which isn't an asset, but I digress, our house, or our medical bills, right? So the next thing would be our lives. Why in the world do we buy life insurance, but we don't buy enough coverage to cover the asset, which is ourself?
Which is the most important asset.
It's the most important
only way
asset.
we can buy the things that we do have.
Mm-hmm. Yeah, and I say this because we say this stat again all the time on the channel, is that 50% of Americans don't have life insurance, and of the 50% that have insurance, 30% of them are underinsured, meaning they don't have enough life insurance. So if you were to pass away next week, your family would be at a financial hardship because your income is not going to be covered, or it won't be covered for several years out. So in this video today, we want to really make sure that you understand the asset that life insurance is, how you can use it today to start cash flowing, and what are some of the key components in understanding how much life insurance you need.
Right. So with that said, what we have to understand is, what is our number?
Yeah.
How much is our life? What is the value of our life?
Yeah. What is that number?
And there's actually a tool that you can Google to understand that number. It's called an economic life value calculator. It's basically a tool used to help you estimate the economic value of your life, of your working life. And keywords in there, of your working life, because what economic value calculator takes in consideration is your current income, which is the amount of money that you're making right now, your growth rate, which takes into consideration your promotions and inflations and your career advancements. And the other thing is when you want to retire. So after you retire, you're not going to make as much income because you're going to be living off of all the work that you did. So understanding the fact that you need to know those three numbers makes it very easy for you to calculate your economic value, the economic life value. So for example, if you're 40 years old, you have your age, and you make $100,000 a year, and you want to retire at around, let's say 65. The average person wants to retire at 65 because they can get the maximum amount of all their benefits.
Yeah.
So at that age, just as an example, your economic value would be about $3 million. $3 million is a lot of money. It's especially a lot of money if you can't write a check for $3 million today to your loved one, to who would be considered your beneficiary. I couldn't write a check right now for $3 million to you. Mm-hmm. So that means we need some life insurance, regardless of what type of job you have, what type of passive income you have. If you can't write a check for $3 million, then life insurance is one of those things that you really need to take into consideration.
Yeah, and we're just on the very first point. So thinking about what is your value, I would understand that number first before you then start approaching what life insurance looks like, and or, blow the dust off of your current insurance and make sure that you have that in place. Because what we recognize as life insurance agents, we have clients that pass, unfortunately, all the time. And every time we look at the death benefit, we're looking at, is this a respectable amount of money that can cover our client's family's needs for 10, 15, 20 years, to come. And sometimes we can't necessarily answer that question, which is why it's super important for you to make sure that you know what your number is to ensure that your family is financially protected. And then also that just opens up the gate for you to be able to do more with your policy today when you have more life insurance on board. So I think that then alludes to the second point that we're going to talk about, which is policy loans.
Right. Now, the only way you can get a policy loan is through a whole life insurance policy. So
permanent
life insurance. So whole life insurance specifically has a component called cash value. Now, whole life insurance is more expensive than term insurance. So if, for example, you have whole life insurance policies that's only up to $1 million, there's still $2 million left on the table that you need to get insurance for. You're only a third of the way insured for your death benefit. Mm-hmm. So that's
a long way.
That is a long way
when you think about it.
Right. And depending on our income and our expenses, not everybody can afford whole life insurance, but everybody has a value of their working years of how much they would have their family miss out on if they were to pass away.
Yeah. Now, going back to your point, I'm thinking for the viewer standpoint, what you just said is not everybody could afford whole life insurance. And the specific reason because of that is whole life insurance is going to be more expensive than term. The reason being is just because when you think about permanent life insurance, that's a policy that you're paying for your entire life, as opposed to term where you're just paying for a specific period of time. So naturally, it's going to be more expensive. However, the way that we kind of work through our system is we recognize from our budget how much can we afford from permanent life insurance, and then we can tack on either a term rider, meaning we add term insurance into our whole life insurance policy as a benefit, a living benefit, or we buy a separate term policy so that we can extend the death benefit to ensure that we just have the death benefit coverage on hand, so we're not a third of the way through the process and or underinsured. And then with that term policy, you are able to convert it into permanent insurance within your contract terms. So it just for us that's what makes sense for us and our household and our budget right now.
Right. And basically how we plan on building our system or building our wealth is we have whole life insurance that covers us up to a certain point, and then for the remaining $1 million or so, what we'll do is buy convertible term, which can be converted to whole life in the future. So the second point is the fact that you can get policy loans from your whole life insurance policy. Now, we're not just going to get policy loans just because we can get policy loans. We're going to be very strategic with those loans because these loans are typically have a lower interest rate than a traditional loan, and they don't require any credit checks. So plus the loan isn't considered taxable because it's a loan. So what we're going to do is we're going to take the loan from our whole life insurance policy and we're going to use it to buy passive income or buy assets that put money in our pocket, which allows us to have that asset pay the loan back and provide us additional funds so that we can buy more insurance, which I'm saying converting that term over to whole life.
And this is really with the policy loan standpoint is where we really start to take our income to the next level. So instead of putting our income just in a savings account, we'll put our income inside of a whole life insurance policy, for example. Now we have liquid cash that's available that we can get in the form of a policy loan, or we could withdraw it if it makes sense for your specific scenario. We typically get policy loans, and we have a death benefit at the same time. So now we've just taken our income and created two assets, a liquidity and a death benefit should something happen to us. And that's where this thing really starts to take off, is because with the policy loans and the liquidity that we have available, we can still utilize that for investments. And at the same time, we can still make sure that we have a death benefit.
Right. So that takes care of the cash flow part of it because we're getting loans from our life insurance policy, and then we're going to be using those loans to purchase assets that produce us income. Now, there's a third way that you can use life insurance to build wealth, and that's supplemental retirement income. So for those individuals who make, let's say, over $300,000, the minimum amount of money that you can put into your 401k or IRA it may not be enough to provide the lifestyle that you want when you retire. So life insurance allows us to put those additional funds into a life insurance policy. And again, because of the fact that when we withdraw or borrow against the cash value, we can use it for supplemental retirement income, or for when the market is down. You don't want to take your distribution or the full distribution when the market's down. You maybe want to wait and just do the minimum that year. Then what you are able to do is use your life insurance policy as supplemental income.
The best part about using permanent life insurance, specifically whole life insurance, is that there's options for you. So like we said before, these are wealth building tools. The very first thing is that you do have an asset in life insurance. The next is that you have the liquidity, which we talked about, policy loans. And the third point we're talking about is being able to use this as a retirement tool, right? Because a lot of times we don't know that there are other products out there that can serve as our retirement funding, as opposed to just using qualified plans like a 401k. So that's why, again, it's important for you to make sure that you're aligning yourself with life insurance agents such as Darius, myself, or the Wealth Nation team, and ensure that when you speak to an agent, they understand all of the tips and tricks that you can utilize your life insurance policies for to further your financial goals, right? Because we say it's not just a dream, it's a reality. Financial freedom can happen. Now,
and it's a lot easier than you think. You just need to have a strategy for it, or someone that can put you on game so that you can make this thing work for yourself.
Absolutely.
Do you know how much life insurance you need?
Well, click on the link below, because a member of the Wealth Nation team can help you figure that out. And the fourth point is an emergency fund, or what I like to call a liquidity facility. So in this instance, I think of a liquidity facility as much more of an asset than an emergency fund, because with a liquidity facility, what we want to do is use that for investments. We want to use that to serve in the time of need, because I know that we have had many investments pass our way back in the day because we didn't have a liquidity facility, right? The cash just wasn't on hand. So how can you create these assets on the side as you are working through building your life insurance policy, ensuring your number, whatever that is, creating a retirement fund, and now having a liquidity facility so that you can fund whatever comes your way.
Now, I like the fact that you said liquidity facility, because when we think about like our retirement accounts, we can access our liquidity facility without any penalties associated with it, unlike our retirement accounts if we were to withdraw early.
I like it. And then the last point number 5, is talking about tax-free growth. So I don't know if you all know, but nothing can out-earn compounded tax-free growth. And that's what happens inside of a whole life insurance policy. And so having this liquidity facility grow tax-free is a game changer. And that's what really is going to span the test of time when we are building this whole wealth journey. So these are benefits and perks that come along with just having this one product. And again, you don't just have to have one product. You might have multiples depending on what your number is. And for Darius and I, we have multiple policies, and we'll continue to have more policies, because we know, back on the point that you were talking about earlier, the growth rate, we know that our income is going to change. We know that our income is going to continue to increase, and we will at that point need more life insurance, because our value is going to continue to increase as we further ourselves in our business and our endeavors.
Right. And I like what you said about compounding, because in order for compound interest to work, you can't touch the money.
Yeah.
And with getting loans from your life insurance policy, you're not touching your money. You're using your death benefit as collateral to get money from the insurance company, which is why they're charging you interest in the first place. So that's the way your money is compounding. And even when you especially when you get a loan and you use those funds to buy an asset, an income producing asset, what you're doing is building your system and not touching your funds. You're using OPM, other people's money, to purchase assets that put money into your pocket.
Absolutely. Yeah. Now, Wealth Nation, I hope that this information was helpful for you today in understanding the 5 benefits to wealth building with life insurance policies, understanding kind of the nuance that we use in this dance of getting whole life insurance and term to ensure our human life value, or the economic life value, because we understand that everyone's budget is going to be different. Everyone's needs are different. But at the end of the day, we all need death benefit. You know, we talk a lot about leveraging the cash inside of a whole life insurance policy to make investments and to create cash flow. But at the end of the day, what we recognize as we continue to mature in this industry is when you are on your deathbed and when your family needs funding, the one thing that we all need at the end of the day is death benefit. So we want to make sure that we continue to empower you to understand what your number is, to go find your number, and to help you align with individuals, like I said, such as ourselves, where we can make sure that you are able to get that number and can apply for as much insurance as you possibly can handle.
Right. And the last thing I want to leave with you is the fact that when you borrow from a life insurance policy, that's simple interest on an annual basis. So, for example, my most recent life insurance loan was at 4.89%. I can't get a mortgage at 4.89%, but I can get a loan for my insurance policy at 4.89%. I can't go and get a car at 4.89%, but I can get
because of today.
Because I'm saying as of today,
interest rates.
As of today, the middle of 2024, we can't go and get those, get access to funds at that cheap of a rate and at simple interest on an annual basis. I pay interest annually on the outstanding loans that I have, and we have right now about $63,000 outstanding in our policy loans because we use it to invest in real estate. So I just want to leave you with that. If you want more information on how we use our policy loans to invest in passive income, then check out our next video.
And don't forget to own your own lifestyle,
or someone else will.